Trading has closed on May 19th, 2023. As always, we'll start with our disclaimer, go over our calls, make some predictions, and because it's the weekend, we'll take a look at the longer-term picture. Well, this is my trading plan for Monday, which would be May 22nd. Please remember my calls can be wrong and all trades should be at your own risk. Several days next week I have personal business. I won't have as much time as I have now to analyze the market. I'm not going to be around for some of these days during when the market's open. I won't have the feel I like to think I normally have, and anyone who wants to risk money should keep that in mind. Look for the pattern today with the early low. We said it could still gap up, and that's what happened. Had a possible high at around 42.08 and change or so. Here's what we said. We said we had strong resistance around 42.0860 cash, give or take a little. We came within 4 and a fraction points. I guess it all depends on what's a little. I think it was the right idea, but we were about 4 and a fraction points off, and you can grade that any way you want. These are the patterns I'm looking for next week. Well, let's take a look at MEJT said during the day, said this rally was false, wouldn't stick, said this drop was false, wouldn't stick, and that's all played out. This is the daily chart. We're staying over Tom DeMark's TDST line. It was major resistance, and we've broken through, but to really break through, you need one bar trading completely over the high of this bar. But just because that didn't happen, it doesn't mean you can slough this off. This is still a significant break of a line that had held for a month and a half. And what I view as more significant is that we've now broken through the 89-week moving average on the close. Now maybe that won't stick. There was one time here where we broke through it and then promptly reversed. So there is a precedent. But if you go back years, we're either going to stay under that line or over that line. I mean, this was the COVID low over 3 years ago. Otherwise, you're either over the line or under it. I mean, you stop right at the line. Here I'm going back to 2019. I mean, that's a major line. And except for this one time where we broke through for a brief period of time and couldn't hold it for more than a week, that really marked the end of a negative period for the market and the start of a positive one. So if this isn't reversed promptly, I think that's a very significant breakthrough. Well, we can't really be certain about how to count this, but I'm going to use this as my count. I can always change it, but I think we made a leading diagonal triangle. I think we're still in wave 2. I think at some point we'll complete B and have a wave C. But if this is as significant as I think it is, these moving averages 50 and 200 will most likely hold. It is negative that we broke out to a new high and closed in the red. We only closed in the red by 6 points. We're still making higher highs and higher lows. The close was over all intraday lows, over yesterday's high, and so far as I can see, this is just a standard 61.8% retrace of the rally. So even though we had some signs of a top here, I'm not seeing the kind of follow-through I would expect. Now, it might change on Monday, I don't know. So far, it's a rally to a new high, a 61.8% retrace, and we're rallying again. I mean, I did have 819 bars and 819 points. For some reason, when I did this the other day, I had it a few points lower. That might mean something, but that's just not enough for me. I can change my mind later, but I like more evidence than that. We do get to cross an old MEJT target off the list, 4203.05 was an ultimate target. You'll see in a minute why I like to cross ultimate targets off the list. This goes back to August. So every now and then we like to look at the track record of the system when you cross off one of these old targets. Well, we closed out last year at 38.39, right about here. I said at that time we had 10 failed targets from last year, one of which came right at the end. And I said I expect most or all of them to print before this year was over. It's been 4+ months and we printed 4 of those targets. And we still have 1 lower and 6, make that 5 higher to go. To get the next higher target, you have to go to this cluster in April, and before that we had a cluster in January, and every target from 2021 is already printed. These are the 2022 targets. Well, this is the track record over the system. It'll be 21 years old. I came up with it from June to August of 2002. You'll see most of the years, every single target printed. See, 2015 we had none. We had 9 targets which didn't print in 2016, but they only occurred over 5 weeks. They were in clusters. 2017, every target printed. 2018, every target printed. 2019, every target printed. We still have these from 2020. Can't win them all. In 2021, every target printed. And now we're down to only 5 regular and 1 ultimate target from 2022. So we have 1, 2, 3, 4, 5, 6, 7, 8 ultimate targets we haven't seen print in 21 years. We get about 150 ultimate targets a year. 8 haven't printed in just about 21 years. So it's roughly about every 2.5 years we get an ultimate target which doesn't print, and that's out of over 3,000 targets. They just don't always print when you want them to. Well, the long-term picture, I think, is that we've completed this huge ABC. We've completed 1, we're making 2. I don't know the degrees of these waves, but I'm looking for much higher prices. I just think you have to finish wave 2 first. And then I think there's going to be a big party on the upside, because I don't look for much in the way of a drop from here. Well, Monday's pattern has the early low. It could still gap up. Typically, it's a rally day with a final hour high. If it's weak instead, then more weakness tends to follow in subsequent days. It's somewhat bearish that we hit a new recovery high but closed in the red. However, we closed over intraday lows and over yesterday's highs. The S&P is over its 89-week moving average, and that's important for me. And these are all positives for the market. there still should be a correction at some point to complete wave 2, my count says we completed wave A of 2. We may have completed wave B of 2, but I need more evidence than I have now before concluding that we've completed wave B of 2. I mean, this just, at this point, is just a regular Fibonacci pullback. I'm not certain this leg of the rally's over. Doesn't make me right. Tomorrow, Monday, rather, has a early low. Tends to be a rally day. If it's negative, then that might hold, but I don't have enough to call this stop holding right now. And that's today's call.